at, it's interesting how the big investors, the big institutions, they've been dumping a lot of their tech stocks, like Oracle, for example. And just a little while ago, Oracle made a deal, remember, with OpenAI, and the thing took off like a rocket. But the big institutions are getting worried because they're not seeing any returns or great returns on all the money they're investing, especially in their data centers. Well, in 90 days, Meta, Google, Oracle, and Amazon increased their debt by 400% in 90 days to build out these data centers. This is nuts. Here, take a look at the stocks for a moment. Just take a look at Oracle. What's happened to Oracle? Oracle is just tumbling. And word of caution, stop listening to these people on TV that tell you to buy on the dips. You never buy on a dip on a downtrend. See the downtrend? Never do that. You buy on dips when the trend is going up. But every time I hear them on TV telling you, buy the dip, and the trends are going down, I go, oh my God, these people are going to get slaughtered. So what's going on here? Well, first of all, we had some more information today that was crazy. We find out today, or yesterday, remember, QT, and I told you this was going to happen last week, they were going to end QT. All right, let's go back and look at QE. What's QE? Well, QE, remember, is where they print this money, massive amount of money. Treasury takes that money, gives it to the Fed gives it to their five biggest banks go out and they go to all these other banks and say, here, we want to buy your assets, we want to buy your T-bills, we want to buy your treasuries, mortgage-backed securities, we'll buy all that, and now you got cash, and they take those securities and put it on the balance sheet of the Federal Reserve. Well, by 2022, remember, because they've been doing this, inflation's up 9%, and we're in an election year. So everybody panicked, and they started doing, well, we got to get rid of this stuff that's on our balance sheet. Let's do QT. So they started to dump about $60 billion a month. So now their balance sheet's down to about $2 trillion. And you got to remember why they're doing this. Now, they're not going to tell anybody. They're ready for another QE. And QE is a terrible thing. Remember, we still haven't got our inflation down to 2%. QE is so inflationary. All this printing of money is inflationary. And what are they going to do? They're going to do the same thing all over again to get the stock market to rally. But here's the problem this time. People know the effects of QE. And usually QE, and you're not going to hear this from Wall Street or these jibber jabbers on TV. When you first start out with QE, everybody tells you, oh, this is terrific. The market's going to really rally. It's going to boom, right? But that's not, history doesn't show that. History shows us in the very beginning when they do QE, you got yields going up, bond market going down. And if you get a real bad deal where yields go up so much and the debt goes down, you could have a crisis in the bond market. But no, when they tell you, oh, this is good, QE, history shows you when they start out for about the first 6 to 8 months, the opposite happens. Yields go up. And that's not good because your bond market's falling apart going into a crisis. So it won't be long. Now, they haven't told anybody they're going to do this, but you watch. Be on guard. They're going to come out, and they're going to change the name. It's not going to be QE. They're going to come up with some name like, Gun and Roses, no inflation. Who knows what they come up with? Whoever makes these names, they're terrific, right? But this is very dangerous. So we have not beat inflation, and now they're going to go do QE. So this could really take the market down. This is what could create a big correction or even a crash. This is so dangerous to do. So when you hear how QE is going to start and everything's going to be wonderful and the market's going to be terrific, it's not the case. They're not telling you the truth. And And the other thing too, remember, is everybody's still talking about a recession. We're already in a recession. We've been in a manufacturing recession, a financial recession. Now, we are graduating to stagflation. And stagflation, I told you over and over, is terrible because you can't get out of stagflation. Because the only way you get out of stagflation, you can't cut rates like you do with recessions. You got to get the government, you got to get Congress to cut big time, cut spending. They're not going to do that. Congress never cuts spending. Matter of fact, they always rig their budgets so they don't cut spending because they want to bring all that money home. Pork, build new roads to nowhere, bridges to nowhere, so they get reelected. I don't care if it's Republican or Democrat. So that's going to have a lot of heavy weight on the stock market going into the new year. So between this, what's going on with all this debt in tech, what's going on with the national debt, and we can't even pay our national debt. Interest keeps going up. It's crazy. And then to try to go into QE, I mean, it's like somebody sitting there pulling the switches for suicide. This is insane what's going on. So we just have to deal with it. And the way you deal with it, don't worry about it, as long as you know how to sell short. See, when you know how to sell short, you know how to go long, you're in charge. But when you just buy, don't know anything about shorting, they're in charge. And that's why 90% of retail investors lose money. So don't be part of the 90%. philsgang.com.